Grain market rundown here for Tuesday, July 8th. We're off to another weaker start following President Trump's re-announcement of delay, but still going to say he's going to add a new 25% tariff for those two biggest U.S. corn buyers. Yesterday, Japan and South Korea. Both countries have until August 1st to negotiate, but the move has reignited big demand concerns for corn. But, look at it. I mean, they're big demand concerns just because we've had such a big export program. And then on top of that, you also have Midwest weather that's just looking prime for pollination for the next 2 weeks. Good rains, no extreme heat. You're not getting that heat on the overnight. So you're seeing private yield estimates just get ridiculous. Remember, every 1 bushel per acre increase adds about 90 million bushels to ending stocks. So, the commitment of trader data shows spec funds net short in corn hit a 10-month high, but with plenty room still to add if we break through last week's low. Also, Brazil's harvest is still behind pace, but moving steady on a big crop, so there's no big bullish offset. For now, the bear camp keeps the edge in corn. Turning back to soybeans, similar story. Heavy fund selling hit the market yesterday, and there's light follow through pressure this morning. You're seeing soybean oil up slightly thanks to stronger crude, but overall, weather and tariff story are both bearish beans. Crop conditions held steady and at 66% good to excellent, but Illinois and Ohio still kind of lag there. Fund positions nearly flattened beans with meal shorts at a record high. So the market may test June lows if we don't get some surprise bullish trade news or some trade deals actually done before August 1st. Second, and finally, wheat avoided the worst of yesterday's pressure, but still gapped lower. Russia just cut its export tax to zero, a clear sign they want to move more wheat onto the global market. Harvest is near average pace, and while there's heavy short positioning in funds, without new demand or a bullish trade development, the downside risk remains. Um, Bottom line, tariffs, strong crop conditions, and big fund shorts, keeps grains under pressure this week. Without a weather scare or fresh bullish trade news or trade deals, bear camp kind of stays in control.